Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market rise 3.84%, which means we're up year to date 6.73%. We are now up back again from the highs that we saw in February, 2.69%, and then up from the lows that we saw in March, 55.41%. So this week we saw the best week in both the S&P 500 and the NASDAQ since July. And a lot of that optimism was around the next round of stimulus. And then we also want to talk about the Tech Antitrust findings that came out from Congress earlier this week. So Rich, let's get into the next round of stimulus. Why is the market projecting that we're already almost guaranteed a stimulus at this point?
Well, we've had the Federal Reserve come out and say that they can only do so much and that we need to have stimulus. Both the Democrats and the Republicans have talked about that they want to get $1,200 stimulus payments out to people. They want to help small businesses. They want to help the airline. The disagreement is just after that. And Wall Street is now believing that with the negative information coming out about how the economy is beginning to stall again, and due to the coronavirus, there is more pressure on both the Republicans and the Democrats to come up with some type of stimulus package.
So for the past month, we've been talking about back and forth, and the market has been very volatile leading up to the election. And now it kind of seems like the market at this point doesn't even care who's elected, whether it's the Democratic sweep, if it's a Republican sweep. At this point, what the market really cares about most is it wants its next round of stimulus, and both sides talking about it. As long as it happens, before the end of the year or right after the new year, it seems like the market doesn't really care at this point who's actually leading the charge.
Well, I think there's a lot of truth to it, but it's also, I suspect we're going to have a lot more volatility if nothing is agreed upon before, and it looks like nothing's going to happen before 2021. I think we are going to see a lot more volatility anyhow, just because the election, just as in fear, but we've been predicting that and seeing that as we go. But overall, as you said, the market is pricing in that there will be some type of stimulus. It's just a matter of when and the size of it.
Well, thank you for that. So then the next big piece of information that came out during the week, and potentially a little bit surprising to see that the NASDAQ actually had its best week as well since July, considering that Congress came out with findings that, big tech has actually been practicing in some potentially monopolistic practices of acquiring competition, actively trying to sink competition. So what are your thoughts on that front?
Yes, well, looking at what's happening, first, depending upon who gets in power, whether it's Democrats on both houses and Democratic president, then I suspect Congress is going to move more quickly on the issue of antitrust and anti-competitive behavior by big tech. I think that big tech is large enough that they're going to be negotiating what anti-competitive behavior is and what they could do to keep from getting broken up. Microsoft did that, if you remember, back around 2000. And we've seen this before with Google. We've seen it with IBM. We've seen it with AT&T. But that having been said, very often when a company is broken up, the pieces are worth much more than the whole. So it may be better for the stock market and tech shareholders if some of these companies are broken up. Obviously, it will make things more volatile while it's going on for these particular tech companies, because how they're broken up is just as important as if they're broken up or not.
Well, thank you for that. A lot of detail there. I think one of the important things is to even just mention what is, antitrust, anti-competitive, monopolistic behavior. And so what have we seen? What has Congress said that they've seen? And what it is that we can take any of the big four for an example, but let's start with Facebook. So Facebook acquired Instagram. It was this new up and coming social media platform that was seen as a competitor. What did Facebook do? Facebook went and bought it, eliminating one of its biggest competitors. So that's an example of one. Apple, they used Fitbit as their example. In Apple stores, they used to sell Fitbits, and it was actually one of Fitbit's best revenue generators. Then what happened? Apple came out with the Apple Watch in the fitness industry, completely stopped selling the Fitbit watch or wristband.
Yes, wristband watch.
And then only started selling their own product. Amazon, a marketplace that competes, they sell their own Amazon product as well as third-party vendor products on the same platform. Are they overweighting their own personal product as opposed to the other third-party vendors? So these are all the areas that Congress is looking at and saying, hey, we see monopolistic tendencies across the board in big tech. What I'm interested in seeing is, as Rich said, fighting it could potentially lead to some new players in the market really gaining market share as these big companies are spending all this money to stay not broken up. But two, I'm wondering if there's an opening to argue globally they're not monopolistic, and maybe in the US they hold a greater majority, but around the world they're not really a monopoly. I don't know how that will turn out. I know some people have been talking, Apple is a big market shareholder in the US in the iPhone industry, but across the world globally, they're second to Android.
Yes, and we've seen this before. And depending upon what the administration is in power and what they're looking at, usually determines how they behave on the antitrust sector. So as always
That's a
said,
fair
the
point,
devil is in the details.
There's always kind of that backdoor, if it's for the benefit of the US economy or the US national people, then it's not deemed a monopoly. But if they're using their power to raise prices for themselves and drive their own business, then it is viewed as monopoly. So there's kind of always this backdoor in Congress anyways that allows it to deem. So I think noting whoever takes control of Congress and who is in power has a lot to say of whether or not this is going to be broken up.
Yeah, the other part is usually too, that goes with it, is that depending upon what is viewed by the public as helpful or hurtful, usually determines how strong the antitrust fervor is. Historically, the great example was Standard Oil was the largest monopoly for many, many years, and the government didn't go after it until they stopped decreasing prices and decided to raise prices in order to give a greater rate of return to the largest shareholders, which were the Rockefellers and other people. And almost immediately, within a few months of raising prices on oil, the antitrust fervor for, again, Standard Oil occurred. So what we're seeing now being played out is something very similar, where we're weighing as a country, are the benefits from big tech being big outweighing the benefits of society to breaking them up because they are having monopolistic behavior.
So FAANG has led this market rally. Is it time to dump all your FAANG stock and run away for the hills?
Never time to do that. Uh, Once again, as I said, very often the broken up pieces of a monopoly is worth much more than the company beforehand. We saw that with AT&T when it got broken up into the little bells, and AT&T that was worth much more and than the original AT&T.
Well, thank you for joining us this week. And as always, we want to end with your money's here for you. We're here to support you. Keep asking us questions. Let us know what's going on in your lives and keep us in the loop. We appreciate it, and we'll see you again next week.